Hello friends, welcome to my channel and thanks for watching this video. Welcome to another series or another session of USA Weekly Market Report. And what you can see on your screen is the last Friday close for all the major indices of US. Now, probably you may call it as a subdued market or is in a consolidation or moving inside a range. But let me tell you one thing, there are a couple of things which are happening and there are lots of positive trends that are emerging right now. If you can observe these first three you know indices, Dow Jones, Nasdaq and S&P. Now I'm least focused on S&P. I mean, in as per the discussion, as far as the discussion is concerned, and I take the trend of S&P 500 far superior than Nasdaq and Dow Jones, because S&P will represent mostly everything. Okay, so you will get the flavors of across the sectors. But the thing is, I have talked about the level of 14,200, I think, last month, and then there is a fall, and again you can see the Nasdaq indices has again closed above 14,000 level. So this is a very positive thing that you need to look at. Why? Because Nasdaq indicates high beta trading action, and the number of constituents which are included in Nasdaq is far, far, far more when you compare with Dow Jones or S&P 500. Now, I've been quite vocal about VIX, and this has been falling and falling very consistently. And if you are looking at the long term trend, what you can see is a big decline over the next upcoming months and years. The interesting as well as the important thing or the trend to notice here is US 10-year bond yield. And as you can see here, it has cracked on the downside, which means that it's going to be very, very bullish for the equity market, right? And last time I talked about the US dollar index. Now I have been talking about this index because currency moves the market, right? And I've been saying that this is the last time when it is US dollar index trying to defend 90 by its whatever strength it has. But if it unable to sustain above 90, and once it cracks below 88.2 or 88, you will see a very, very sharp decline in the price of dollar index, and very big fall in the chart as well, which will lead, or which will cause the stock market to go even higher on the upside, right? Now let's talk about the chart. Okay, let's discuss about the chart. So this is the first chart of US 10-year bond yield. As you can see here, after retesting the high of, I think, 1.8, okay, nearly 1.8, here we are. So the high was 1.77, right? So nearly hitting the high of 1.779 or 1.8, I would say. It has collapsed very sharply. Now it's been trading within the range, I must say here. So this is the range which we are talking about, and we have to keep things intact, whatever you can see on the screen. So currently, if you're looking at the long term chart, this is the monthly chart, it's been moving in between 1.37 or 38 on the downside. Let me 1.38, and yeah, we are okay, 1.38 and 1.32. okay, so these are, and 1.444 will be your primary support, or this is not 1.44 actually, this is 1.43 as your primary support, then you have 1.38 and 1.32. Once or if the US 10-year yield is not able to hold 1.332, you will see a sharp collapse in the bond prices, in the bond yields, which will further push the stock market as well as the bond prices higher, right? So this is what you can see. Now, talking about Nasdaq, so what we are talking about here is the Nasdaq indices, and I am saying it, time to time, that once it will move uh, above 14,200, you will see how sharp the rises will be in the stock price, because a risk on trade will again come back. Okay, so this is very important to understand here. And those who are trying to short the market, I don't want to talk about professionals because they have their own strategies. But if you are new, to the market, and if you don't know how trend works, better be watchful. Don't try to do something which you don't understand, more specifically when you are talking about the trend, because the trend is seriously on the upside. And if you are trying to mess with it and trying to short the market because you think that something bad is about to happen, then, and if you have put money on the wrong side, you will end up with very bad losses, let me tell you. And this is not about any arrogation or something else. This is simply about the trend and what the screen is telling you. So respect the screen. That's what you need to understand. If it is down, say it is down. If it is up, say it is up. Okay, when it is up, you cannot say it is down. So you have your two big support, first at 13,691 and second will be at 13,326. And on the upside, I will look at 14,189 or 14,200. And this pattern is a very positive pattern, this ascending triangle pattern, because whenever a breakout happens, as far as the technical pattern, chart patterns are concerned, whenever a breakout happen, it will give you far bigger rises than one can think, right? So wait for the level to get crossed, and you can see the kind of stocks which will start running. And there are lots of stocks which has already turned out into big multi-baggers in the last 1 or 2 months. You better check out the broader market. Don't stick to the big companies, because the momentum is in smaller and mid caps. So that's the important thing you need to understand. Now, talking about the dollar index, uh, this dollar index is losing momentum day by day. And I keep on saying that although things looks good, the dollar is trading within the range. So this is last time I have talked about this chart and about the levels. Now you can see here how the dollar is taking support. Okay, so the dollar is taking support significantly, and the levels which you need to look at will be 89.75 as the first support, then 89.1, and final support will be 88.23, right? And on the upside, you will have your resistance at 93. But if it enables to hold, because the momentum indicators are down, right? The momentum indicators are down, and things are not looking good. So there are lots of indications. And when I talked about trends and indications, generally I talked about weekly or monthly trends which work in long term. So I don't bother if the trend moves 1 or 2 months on the wrong side, or 5 or 6 months on the wrong side. As far as the trend is concerned, and if the trend is intact, I don't bother about that. But when trend changes, it will at least what will happen, either it will give you x to the power in kind of profit, and the losses vice versa. Okay, so you better understand how the trend is working and what you can look as far as the trend is concerned. Now, I think the last week is probably very good, and I don't want to, push anything which is not there into the market. So, what you can see here is buoyant market, and understand one thing: when you pump money into the market, there are a couple of things which you need to look at. Inflation will definitely rise because money will find its way. Second thing, when commodity cycle rises, it will have a very positive a domino impact on other sector as well as economies as well. So if the commodity is on the higher side, obviously there are some supply and demand issue, bottlenecks, and when the demand increases, supply will definitely rise. So the commodity price or the natural gas or oil prices will get stabilized. But if you look at the overall commodity basket, you will see demand will push the price higher, push the price as well as the profit higher. So don't expect anything that this is going to end very soon. Okay, this is the first thing. Second thing, what you need to look at is you will get inflation. Okay, but one thing that nobody talks about is the growth. When inflation comes with a growth, there is a fair possibility that market will focus on growth rather only focusing on the inflation. If only inflation is there and no growth in the economy or the GDP, then it will be a serious problem. And that's why the central government of US and all the developed economies keep on pumping money for the last 1 decade, because nothing was working. Now when things are in doldrum, and there is after the pandemic, there is like no turning back, and when the central bank across the globe pushing tons and tons of money, things work out. When the reopening trade works out, things will be on the upside. But do not, I don't want to talk about the subject, but as a summary line or as a baseline, uh, what you can say is, do not only look at inflation, look at the growth part. And if the growth is also increasing along with the inflation, you will see that the market will increase higher. So this is the end of the video. If you like this content, do share your thoughts in the comment section and subscribe my channel. Lastly, take care of your family and friends.